Hello and welcome to 3.0 TV. I am Vishakha Thakur. Since the launch of spot Bitcoin ETFs in January 2024, we have witnessed phenomenal institutional participation and retail adoption with over $42 billion in net inflows and assets under management now crossing $100 billion. Well, it's a pace even faster than the historic rise of gold ETFs. So what is driving this demand? Who is leading the ETF race? And what is next for crypto ETF products as Wall Street giants like BlackRock, Fidelity, and even Goldman Sachs deepen their exposure? Joining me today is someone who has tracked it all from the front lines, Mr. Eric Balchunas, the senior ETF analyst at Bloomberg Intelligence and one of the most followed voices in the ETF space. Mr. Eric, welcome to 3.0 TV, and it's great to have you with us.
Great to be here. Thank you.
So can you give a brief overview of the crypto ETF space to begin with?
Yeah, so there's hundreds of them around the world, but the big news in the past couple of years is the spot Bitcoin ETFs in the US. These were a game changer, and they've so far grown to $100 billion, depending on where Bitcoin price is. I think they're a little more at this point. Maybe like 110, 120 since the rally. But anyway, it's a lot of money. These ETFs, started with nothing and have built up into a pretty big category very quickly. And the reason is because they are low cost, liquid, and no friction. You just log on to any kind of brokerage account, type in the ticker, hit buy, you're good. This is contrast with some of the friction involved with buying Bitcoin or commissions that are pretty high. So ETFs have done this with many asset classes. So that's the big news, I think. And then once you get beyond Bitcoin, there's Ether ETFs. They've done okay. Right. Then there's a couple Solana futures. And then across the world, again, everything's nickel dime compared to these US spot ETFs. These spot Bitcoin ETFs have the majority of all the money in the crypto ETFs across the world. And I think they will for a long time.
Well, that's right. And, spot Bitcoin ETFs have been a game changer for the entire crypto market. And now let me quote you. As per your prediction, spot Bitcoin ETFs will have 3 times the AUM of gold ETFs in the next 3 to 5 years. So what are the key parameters or reasons behind this optimism?
Yeah, I do think gold has its place. But remember, gold ETFs have been around for 20 years. And they've kind of stagnated even before Bitcoin arrived. Now with Bitcoin, it's sort of like gold as a teenager or young gold. It's more volatile, but it's more exciting, and the upside's potentially greater. So I think what you're going to find is you're going to have a lot of the advisor and institutional world adopting Bitcoin first in very small amounts and maybe growing it a little bit. And one of the reasons we think Bitcoin is possibly it's going to triple gold's assets is there's the portfolios today. A lot of people have bought like a cheap index fund for like their 60-40, and they're looking for some speculative assets. And so Bitcoin fits perfect. It's a nice way to add some spice to your otherwise boring portfolio if you're like a regular investor. Gold is not really that exciting. It's had a good quarter, but we just think Bitcoin is going to appeal a little more to the speculative itch over here in the US. And I also think what's driving the narrative now isn't just the ETFs, but rather the corporations, which are putting some Bitcoin on balance sheets, governments, which are adding reserves. And the more you see this, the more it's going to probably attract people into the ETFs. So it's a pretty good looking outlook. Doesn't necessarily mean it's going to go up or we'll be right. We don't know. The future is uncertain, but we pretty confident that's what we're going to see play out over the next 3 to 5 years. That would put Bitcoin ETF somewhere in the ballpark of like 400 billion, something like that.
Wow, that's great. And in fact, absolutely, the gold ETF investors are transitioning their portfolios or, adding spot Bitcoin ETFs as well. And there's global adoption of Bitcoin happening. Now, talking of the asset managers, BlackRock, the world's largest asset manager and one of the standout performers among US spot Bitcoin ETFs, has attracted over $40 billion in inflow. So what is the reason behind this dominance versus the others of such as Fidelity, Franklin Templeton, etc.?
Yeah, and they all launched the same day. So in the end of the day, all else equal, the two most important things that advisors and traders and investors look for when buying a new ETF is fees and brand. So BlackRock's Bitcoin ETF was competitive fee-wise. It was 25, but there was a rebate. Anyway, it was cheap. And the brand, BlackRock is one of the biggest. It is the biggest asset manager in the world.
Yes.
Vanguard's number 2, and they don't have a Bitcoin ETF. So BlackRock was by far the biggest asset manager. They're the number 1 in ETFs, and they've got it cheap. And it was pretty liquid from day one. Throw in the liquidity, and it's pretty irresistible. So it had cheap, liquid, and brand all right off the bat. It's a very appetizing combination. Now everybody ate. Even last time I checked, the Van Eck had over $1 billion. Wisdom Tree was around $1 billion. So even the ones that were sort of coming up the rear in that, early, I think there was 10 of them that launched in the first day. They're all doing fine. But BlackRock is on another level. IBIT has become the GLD of Bitcoin.
Wow.
It trades much more. There's more options activity. I think the options activity on IBIT is about 90% of the group. And so you're going to find that IBIT will be the one probably preferred by the biggest of big investors. So if you see institutions, hedge funds, traders come in, IBIT's probably going to be their one because it's the most liquid. But it also appeals to the long-term investors who like brand and cost. That said, all of them are good. I don't want to favor BlackRock. They're all pretty much do the same thing. They're cheap ways to store your Bitcoin and outsource it all. And that's why you see BlackRock, I believe, is 68% of the market share of the whole category.
True.
So there's plenty of assets in the other ones, but BlackRock definitely dominates, and they've taken in about 90% of the flows in the past month. So they've really stepped it up lately as well.
Absolutely. BlackRock does dominate the ETF space, and there are other asset managers as well. But recently, in year-to-date inflows, even BlackRock's IBIT surpassed GLD's inflows. So that's great. And we know that crypto market is highly volatile. But Eric, we often observe Bitcoin and Ethereum flows swinging alongside the price movements. So can you share with our viewers what factors or events they will have to track in order to make successful bets in crypto ETFs?
Yeah. Well, look, I don't know the future.
Okay.
I readily admit that. I've been around long enough to know that who knows. But it seems to me you want to divide crypto into two sections. One is Bitcoin as digital gold. It's indestructible money, it's scarce, and has gold-like qualities. So it's a good way to sort of store value of your wealth. It's volatile, though. That's the downside. So that, to me, that's Bitcoin. It's like, again, gold is a teenager. The other side is crypto. Ether, XRP, Solana, I'll call those altcoins. Those are really bets on which blockchain and which network is going to grow the fastest. Those are almost like betting on individual small cap growth stocks. Like which of these names in the semiconductor space will get the most sales? We don't know. But those are more like betting on stocks, in my opinion. Those tokens are associated with a growing platform and blockchain that you're hoping is the number one. Solana's mentioned as one that could be, challenge Ether. Ether's sort of the big dog of that world. And there's a bunch of up-and-comers. So I think maybe what we think we'll find is a basket, like an ETF basket of all those together. That way you can just buy the whole basket and not have to pick a winner. Then on the third, I guess there's a third sort of angle here, which is the meme coins. Mm-hmm. So far, we haven't had a meme coin ETF yet, but we do have DogeCoin is filed.
Trump is
Bonk filed.
Bonk is
Trump,
filed.
Melania.
Yes.
There no fart coin yet, but who knows? It's still early.
True.
But those are meme coins. Those, one might have its day in the sun and attract some investors. I don't pay. It's more just fun over there. But the other two, to me, are I think, going to looked at as some pretty serious investments. The only thing I would say is, our phrase is, the further away you get from BTC, the less assets there will be. So as you get into Ether, Solana, XRP, they're just going to be less and less assets. We think Bitcoin will acquire and make up about 80% of the assets in the crypto category.
All right. So we will also talk in detail about the other, altcoin ETF filings and meme coin filings. But currently, the big thing is that SEC is reviewing BlackRock, Fidelity, and other asset managers in-kind redemption proposals for Bitcoin ETFs. So if approved, what kind of impact could in-kind redemption have on ETF flows, liquidity, and overall investor participation?
Yeah, the in-kind redemption, for those people who don't know, I won't go into the details. Just, it's basically like a slightly better plumbing in your house. The toilet's going to flush a little quicker, a little harder. It just fixes the plumbing a little. But all in all, you probably won't notice that big of a difference. If anything, you might see the percent premium, the price versus the NAV will come in a little. It's not a game changer, but it's helpful. The other thing they're looking at is staking in ETH ETFs, which could help. Could get like 3% extra return. That's a little more meaningful, in my opinion. Those two things, I think, are both being championed by BlackRock, and they're pretty, they're big. They got a lot of, lobbying power, and you've also got a better SEC, better meaning more open to that. I think the old SEC was worried that if you had in-kind creations in an ETF, that means that you can create shares of the ETF using Bitcoin sourced from anywhere. You just hand in the Bitcoin, they give you ETF shares back. That's called in-kind. When you only allow cash, it means that only certain people can source the Bitcoin. That way you can isolate which Bitcoin you use, and nobody would use it to launder money, or it won't be like dirty Bitcoin. But I think over time, people are like, look, you can't make everything perfect. There's cash that people use for laundering. I don't think anybody really cares that much about it. I'm just telling you the mindset of why they didn't allow it at first. And ETH staking is a little more complicated because you can't really lend out securities in a 33 Act fund. But this isn't exactly the same thing. But the question will be, if you lend out your ETH, what if the ETF has some withdrawals? Will it be able to get the ETH back to do the redemption? How much ETH could it lend out? Could be a situation where only part of it is allowed to be lent, and therefore the yield is smaller than you would get elsewhere. They're working that out. But I personally don't think the people buying Ether are buying it or not buying it because of the staking. I think they either like it or they don't. I don't know if it's that big of a game changer. It's, again, both those things are nice to have, but not going to change the situation dramatically.
All right, interesting view on that. Now, we have over 70 crypto ETF applications of all coins, such as Solana, XRP, DogeCoin, and as you spoke about the meme coins as well. But what's your take on the timeline and approval likelihood?
Yeah, so right now, the SEC, which is Atkins, the chairman, and Hester Peirce, who runs the crypto task force, they have been taking meetings with people in the industry, issuers. What they're going to do, and they've said it many times, instead of taking these applications in and you not knowing what they're thinking and whether, they're going to give us a framework soon. And I think that framework, once they come up with it, will dictate what gets approved and not. And so it'll be much clearer when something's filed whether it can be approved. So I'm waiting for the framework. When will that be out? Anybody's guess, maybe in a month or two. Okay. So that means I think you're looking at some of these filings have a final due date of October. So I would say between July and October, I would look for a lot of action. But we need the SEC to give us that framework. Because that's why you haven't really seen much launched since Trump won. Because when Trump won, everyone's like, oh, great, it's a field day. But Hester Peirce and the SEC were like, look, we like this, we're into it, we like innovation, but let us come up with a framework first. So that's why it's been delayed. It's not been a Gensler-style delay, but it's been more of a, hey, let us really figure this out so we don't confuse people. And we actually interviewed Hester Peirce in her office a week and a half ago, and I could tell that the circus atmosphere and the confusion around the spot Bitcoin ETF approvals and then the Ether was not what she wants to replicate. So she wants to just be clear and then boom, let off to the races after that. But my guess is almost everything gets approved in one shape or form or another. The question is some of these meme coins, but where it gets interesting is, let's say there's a filing for a Trump coin ETF.
Yes.
Now you'd be like, is that really suitable for retail? But then if the SEC denies that, That's kind of their boss. So, Trump is the boss of the SEC. So, and that's his coin. So it gets kind of interesting in a way I've never seen before, where the boss's coin is now in an ETF. How do you not approve that? And if you approve a Trump coin ETF, it just seems like you kind of have to approve most of the other ones. So I'm leaning towards most of this stuff is just going to find its way onto the market, probably by October. But nothing is certain as of yet. But we're pretty optimistic. Our odds are pretty good.
All right. So since you spoke about the SEC's upcoming framework and, of course, US President Donald Trump is SEC's boss. So what is the main criteria as of now of selection of these cryptocurrencies? As we have seen, of course, US President Donald Trump's meme coin, Trump in the ETF race too. So is there a particular framework, there, or is it political influence at play?
You mean the Trump coin ETF being filed?
Yes.
Or just my comments on the coin itself?
We are open for both.
Okay. So I think I could tell the crypto crowd was a little bummed out when he launched the meme coin, because I think especially the Bitcoin people, like they if you study Bitcoin, it is a really incredible design.
True.
It's thoughtful. It's more than just somebody throwing up a token on the internet. But that's kind of what a meme coin is. So I think they were like, oh, we finally got this president who's into it. And then one of the actions is to do the one thing that most of the tried and true crypto people, especially the Bitcoin maxis, are like against, which is just dumb meme coins. On the flip side, that's just how he is. He had he puts his name on everything. It's just kind of on brand for him. And I think it just at least showed he's interested in the space. I try to tell the crypto people, look, net, you're doing much better than you were in terms of regulation. But the meme coins, I think, for most of the crypto crowd is just a huge distraction. But I heard that there's like 100,000 added to Coinbase every day, which is insane. And I was at a panel at Token 49 where they talked, Token 2049, where they talked about meme coins, and they're wrapped up in like TikTok culture and memes, and there's a fun element to it, and I think young people have a good time. I don't really have a problem with it. Like, I traded baseball cards as a kid, and I really like baseball cards. In the end, they turned out to be valueless. So I actually took some of my favorite ones, and you can't see it here, but over there, I made a nice little mural of my old baseball cards that I thought were going to like fund me for retirement. They did not. I had to get a job. But either way, I had fun collecting them. I have fun looking at them. It's fine. But that is different than a serious investment to protect your wealth like Bitcoin. So this is where I think the crypto world is, like I said, I think there's Bitcoin and crypto. And in the crypto world, I think you go from like serious blockchain stuff to like complete, just fun. You know what I mean? And that's why it's an interesting space. It's a big tent. There's all kinds of people involved in it, but some people, I know as an ETF analyst, and this will make sense, that early ETFs are like real plain vanilla, like S&P 500 ETF, total market ETF. Over the years, they've gotten crazier and crazier. Like, there's thematic ETFs, and the early people in ETFs think the industry has lost its mind. So this happens with any industry. You've got the purists who want just the main thing. But as things evolve and people try things, usually the purists are, old man yelling at the clouds about it. And that's sort of, I think, what happened here. I happen to be pretty okay with it all. But I do see where if you're trying to reach regular people and their impression of crypto is Fartcoin, it's just not helpful. Yes. So I think I agree with that. But overall, you can't stop people trying things, and I don't know, it's fine.
That's right. Meme coins are a high risk, high reward opportunity. So, since we spoke so much about spot Bitcoin ETFs and Ethereum ETFs and other ETF or asset managers as well, now banking giant Standard Chartered predicts Bitcoin's price to reach $120,000 by Q2 end. And Michael Saylor's strategy continuously accumulates Bitcoin. In fact, I was reading or, having a look at your tweet a few hours back, and it said that, if we talk about strategy, it is just behind BlackRock and Binance in terms of BTC it holds. So what will be your prediction for Bitcoin in the years to come and the key triggers behind it?
I don't do price predictions, but what I can say is it's hard to see it going lower based on the interest and growth among bigger investors, advisors, institutions, and governments and corporations. The more those people adopt it, the less volatile it will get. And the less volatile it gets, the more it will be used as a true gold substitute, and the more bigger investors will be interested in that. I just think Bitcoin has such a strong case in a world where all the currencies are being debased regularly and sometimes insanely. And people are going to seek out something that stores their wealth that cannot be destroyed or messed with by any government or company or anyone. And that is a pretty appealing situation in a world where debt has gone wild. So, and these corporations and governments understand that. So I think what I'm looking for is a big country or a big stock. So like if you get a big country, like say, China, not China is a bad example, but like, we'll call it like one of the G7 countries. Mm-hmm. I know the US has already added Bitcoin as a reserve, but one other country that's in that G7, Japan or something, then you might find a little bit of a stampede from the other countries to catch up or to keep up. Same with companies. I think if you see one of the Mag 7 stocks like Meta or Google add Bitcoin to the balance sheet, it's going to really go far in knocking down some other dominoes. I'm not saying it's going to happen, but it's now way more in the vision. And you could see it happening in the next couple weeks even. So the other thing I would say is the ability for Bitcoin to rebound from the price that during the tariff tantrum. I mean, I thought it was going to go down to 50 or 40,000 because I thought it was going to go down double the market. I always thought it was like 2x stocks. So it would go up 2x and then down 2x. Right. But it actually only went down the same as stocks. And then it went up more than stocks. So that the ability to like defend itself from going down more gave it a smaller hole to dig out of. Powerful, in my opinion, because it finally showed some strength as an alternative and a possible hedge to stuff. And so I think even though gold performed better in Q1, Bitcoin earned a stripe by being pretty solid, again, as a 16-year-old thing. It's only 16 years old. Gold is 4,000 years old. True. So to me, all of that together looks pretty promising. Then you throw in what I call suit coining. You know what suit coining is? Suit coining is like Fidelity, BlackRock, Invesco, going out, people who look professional, they have suits on, and they know how to talk to institutions in their language. Talking about Sharpe ratio, Sortino ratio, shareholder value. This is all going on right now. And so the more suit coining you have going on, I think the more it's adopted at this sort of bigger institutional level, which again, institutions have, if you add advisors, institutions, and governments together, I mean, you're talking about like 200 trillion in wealth. So even a little tiny percentage allocation would be a ton of money. So I don't know. It's hard to see all that just blowing up. But I leave a little bit of a window open for that. So that's why I'm lean bullish, but I've seen enough to know that I just don't know the future.
That was a great insight, I must say. And, the line I picked the most was a Bitcoin will be the next gold substitute. So thank you very much for talking to us, sir. It was great having you on the show, and I keep covering or taking your quotes in our weekly show on ETFs, ETF Watch Crypto Edition. It was wonderful having you. Thank you for sharing all the insights.
Yeah, thank you for having me. And I'll see you next time.
Absolutely, sir.